Let me just start off by saying I do not go live that often, so I'm going to put the disclaimer right up front. On this video today, the stock market's going down, and I have no idea what I'm doing on a live stream. So if this video ends up being a complete mess, you're going to have to bear with it, but I hope that you enjoy. Today, what we're going to talk about is what's going on in the stock market, because a lot of people have been reaching out and saying, hey, all of my investments are going down. What do I do? Do I sell out? Is this the start of March 2020 all over again? That's what we're going to explore in today's video. Now, I got to pull up this article, and bear with me as I attempt to figure this out. Okay, so here it is. Sell-off intensifies as Dow tumbles more than 900 points amid pandemic fears. Okay, so look at this article. It's going on to say that today, as of right now, we're seeing this significant drop in the stocks. What's going on? Well, a lot of it has to do with coming up to say most of this is due to the Delta variant and things like that. There's a growing concern that more travel is going to be impacted as a result of the cases rising back up and everything else in between. So it's really interesting. And down here, check this out. So here we are in 2020. This graph right here represents 2020. So what I'm a little bit concerned about is, as you can see, you got March 4th, January 4th. We got May 11th there at like a negative, what is that? Negative 1.36 in May, negative 1.5 in February, blah, blah, blah. Look at the top. July 19th. That's today. That's right now, July 19th, on its worst dip for the year of 2021. So I think that obviously represents fear. And a lot of people get scared when they see these type of numbers and they're like, what do I do? And should I just cut my losses? And I think that mindset of should I cut my losses is probably the worst thing that we could do as investors, because who wants to jump off of a roller coaster in the middle of the ride? You want to enjoy that ride all the way through to the station and safely get off of the roller coaster. You don't want to jump off and hope that you land on your feet and don't break any bones or worse. So, one thing to get out of your mind is, should I cut my loss? Now, I'm not going to lie, it hurts. In fact, I'm going to pull up some of my accounts right now and just be fully transparent and let you know how painful this looks. So the Dow in general is down 900 points. Right now, I'm looking at negative $200 in Webull. I'm over $1,000 down in my Schwab account. Things aren't looking good. But regardless of what your accounts look like, I want to share with you some things that I'm trending and tracking. Let's see if this pops up. Again, I'm new to this live stream, so this may not show up the way that I want it to. Let me adjust this so I can kind of show you what I'm up to. Okay, so it's doing exactly what I didn't want it to do, and that is it's going away and not showing you the screen. So give me 1 second. As I pull this up, what I'm going to share with you today is a little bit of a glimpse on the market, not only what's happening today, but we need to look at what's actually going on over the long period of time, because there's a couple of things that I've been looking at. The first thing that we need to see is that, of course, I don't know what I'm doing, so that's the first problem, right? And the second part is what we're going to look at in the future as 2022 comes up. Okay, here we go. Now I'm actually showing you what I want to show you. All right, so here's what we got going on. This is on Google, of course, but right now we're down 869. You see that? 2.51%. This is the Dow Jones Industrial Average. And you look at even like the last 5 days, look at that, down 1,200 points or 3.44%. And just look at this cliff that we just jumped off of today. I mean, this just happened. So what I'm seeing is we're seeing Delta Airlines go down. We're seeing a lot of the cruise lines go back down. I have a lot of investments in cruise line, and I actually purchased those cruise lines back in March of 2020. After everything started shutting down, I saw that as a buying signal, because I'm like, well, at some point the cruise lines are going to open back up. So why not? Got some extra cash laying around. I'm going to throw it toward that and see what happens. And of course, it's still up. I mean, that was a pretty low. But it's still up, and over the last couple of days, of course, it's gone back down, especially today. But let's take a look at this for a second. If I go year to date, and more importantly, 1 year. So there's a couple of things that I think we need to worry about. First of all, you have this decline that happened in March 2020. And then if you look up, here we are on this little blip of a radar and a little bit of a dip down. So one thing I would recommend when it comes down to rookies versus smart people, and if you're on this video, you're a smart person. So give yourself a pat on the back. But the people that I think are rookies are the ones that get scared every time this goes down. So if you're a habitual person that constantly pulls up your investment portfolio and you're looking at that and you're worried every time you see red, you're going to get yourself trapped up into that sense of fear. And then when the news articles come out, like they are today, saying that, hey, there's a rise in cases and things might drop back down, you get nervous and you start putting that back into your mindset of, should I sell and cut my losses? So very first thing I would recommend for the rookies is do not sell on the dips. Dips tend to be a buying opportunity. Dips are when we get excited. Dips are when we take our cash reserves and put it to good use. That is important. You don't want to jump off the coaster when it's going down, as I mentioned earlier. So don't sell on the dips. The second thing is only invest what you can afford to lose. I've said this many times on the channel because it's so important that when you're starting off with investments, you are going to get yourself a little bit scared of saying, oh my gosh, it's going down. I needed next month's rent and I put it in the stock market hoping I was going to 10x. And now I have no money for my rent. That is a terrible, terrible decision to get yourself into. So only find, hey, even if it's $10, don't beat yourself up that you can only afford $10. Put the $10 into the stock market if that's all you can afford to put in and let it go. You know, do your research, get excited about what you're investing in, and let it alone. Stop worrying about it. So even though today, I mean, this all looks great. If you look at this, I mean, look, we're soaring high, right? Look at this way up here. But of course, if I hop to here, this is where the doom and gloom looks like. We're down, and people get very nervous. I say if you're just starting off, look at what could happen. I'm going to give you a really cool thing. I love this within this Google. You know, literally, you just go to Google, you type in Dow Jones, and you can see here I am. It's telling me everything I need to see. Let me go into the 5 year so we can get March 2020 on the books here. So let's say you invested right here. It's like February 7th of 2020. You invested here, and then you like cry because look at the difference here. Do you see this? Oh, let me get this to make sense here. We're down 16%. From February 7th, 2020 to April 17th, 2020. Of course, you can go all the way down to the bottom to be very depressed here at 34% down. If you can see that, 34% down on your money. So if you got excited and you were a new investor at the beginning of February, right before all this crap happened in 2020, you probably freaked out. And I wouldn't blame you in a sense because you're new, you're seeing this, but the key would be you didn't say, maybe I should cut my losses and sell. If you would have just held on and said, hey, I only invested money that I don't really care about. I don't need it for next month's rent. I don't need it for my bills. I'm just going to let it ride. And look what would happen today. Even with the dip today, you're up. Do you see that? You're up 16.23% on your money. So even though you went through one heck of a ride down here in March 2020, you're back up. And if we want to go really insane, and I'm not going, well, you know what, I am going to because I love to prove this point. Let's say you were back here and you're a little bit old school. So you were new back in 2007 and you invested, and then our buddy, the recession came. You were down 39%. Again, same deal. If you would just let it rise and let it ride, look what happens. You're up now 151% on your money. Even during that crazy dip of 2020 when the market was starting to go down because of the coronavirus, if I can get this thing to drop the weight down. Look, it's still up 60%. It's still up 60%. So and what I'm saying here is you're buying at the high right before a crash. You're buying right before the Great Recession of 2008. You're buying right before the pandemic crash of 2020. And as long as you don't do anything crazy and cut yourself off at a loss, eventually it'll go back up. So if you look at this over this long period of time, and what's really nice about this graph is, what is this, all the way back to 1986? I mean, you're going to have these little ups and downs, but look what happens over the long period of time. It keeps going up. And that is the key point. Anytime that this kind of day happens, in fact, I think it happened right at the end of June. I did another video and I said, hey, the stock market's dipping. What should you do? I always like to remind everybody, look, it is what it is. It stinks. It hurts. I hate pulling up my accounts right now and looking all that red. It looks like blood in the street. But I'm going to hang on anyway. And if you have enough cash reserve, let's say you have an extra like $300 laying around, or if you follow a 10% rule, which what I mean by a 10% rule is instead of investing every available dollar, you have maybe 10% in a cash reserve available to invest when things go down. So you don't actually invest that money, you actually put it to the side. Maybe you have it in your brokerage account only as a cash balance. And then when things happen and it dips down a little bit, you take a portion of that and you invest it at that point. So that way you're dollar cost averaging down and you're buying on the dip. So that would be something that I recommend if you're afraid of these type of scenarios happening. So anyway, so I figured I would just come on and say that. Let's see what's going on here. So look at all this. Yes. Hey, I don't do live, by the way. Shout out to all of you who are commenting. I don't do live a whole lot, and I think this is actually my second live. Finally figured out how to share my screen. I think YouTube is a little bit like weird when it comes down to, you think it would just be an easy thing like a Zoom conference where you can share your screen and talk to people and it would be easy. But no, I have to download a third-party app and do all this extra stuff just to show you this Google website. So to me, it just sounds absolutely absurd. But yeah, I'm kind of new to live streaming. But anyway, so I think that, we look at, in fact, I'm going to pull up Delta. I love Delta Airlines, by the way. So shout out to them. Let me get my keyboard right here. So DAL, okay, hold on. Got to get Google to show me what I want it to show me here. Here we go. So we can see that Delta's kind of on a downturn, right? Because people are getting nervous about this spike in cases. And of course, what's going to get hit? Cruise lines and airlines. And look at that, down 16% in the past month. But if I go year to date, 1 year, even 1 year looks good, or 5 year, it's still recovering from, of course, the fears of are people going to travel after all of what just happened in 2020? But it's coming back up. It's going to have a little bit of a dip thanks to this new variant and people getting nervous about that. But these are the kind of guys that are going to get hit. And if you're into this, if you trust Delta, if you've done your research on Delta, I think this is kind of something to look into, because look at this past high at $57 a share. Actually up here at $62 a share in January of 2020, before all of this kind of just wrecked the world. So anyway, I think these are the type of things to keep an eye on when it comes back to what we're looking at, which is the Dow Jones Industrial Average going down 900 points today. So anyway, it sucks, guys. It sucks. I'm not going to lie and say that I'm not like annoyed by it. I've gotten past the point of being stressed out about it. I will say that back in 2008, I did a little bit of trading. I didn't have a lot of money back then, but during that time it started going down during the Great Recession. I decided to put some money into the stock market because everybody was saying, hey, buy the dips, right? That's what we always say. So I was doing that, but in the back of your mind, you're like, okay, well, I'm buying. It's down like 10%. I'm going to buy. But what if it goes down 20%? What if I keep going down? I'm like buying the dips, but I keep just falling down the cliff. Well, that is a risk. That could happen. But if I'm only putting money in that I can afford to lose, who cares? I'm just going to keep doing it and keep doing it and keep doing it. And, eventually get myself back up to where I need to be. So anyway, that's kind of the point of today's video. Don't worry about it. Now, there's another piece that I want to talk about, and that is what could actually happen in 2022. One important piece that a lot of people have been talking about, especially here on YouTube, some of the other creators, is the fact that 2022 could actually do this slow bleed. And it's not regarding what I just talked about. It's not the whole pandemic. It's just here we have had the past year a bunch of flood of stimulus checks. We just got child tax credits coming in, where a lot of people in the States are getting up to, I think it's like $300 or $500 or however much money per month based on how many children you have. And that goes from July all the way to December. And instead of getting that portion, that 6 months in your tax return, you're getting it paid out directly to you. So on top of the stimulus checks, on top of that, and everything in between, and unemployment and all the different things, that is extra cash in the market. So what are people doing? They're buying stuff. They're going out. We're seeing a lot of businesses starting to report better earnings. Some are even saying that they're doing better than they did in 2019 because of that influx of cash. So that's a little bit concerning, because what happens in 2022? What happens when the stimulus and all that extra money in the market goes away? Would we see, not necessarily, I'm not going to say a crash, but just a slow little bleed down? Maybe you could call it a market correction, back down to maybe a more stabilized norm. And honestly, that's where stock market investing can be a little bit boring, because we're going to be looking at this and saying, okay, well, here we are, and we got some flat returns going on, and we're just waiting for consumer behavior to kind of stabilize again. That's a risk. I don't know. I'd be interested to hear what you guys think about that. Could all of this extra money in the market, as a result of all the stimulus checks, all of the unemployment, all of the just people sitting around at home and collecting cash, for those people that were fortunate not to get laid off during the pandemic, I mean, you were still bringing money in. And if you weren't going out to do things because you were locked in quarantine, you were probably saving up that money. So now you have an excess of cash. What are you doing with it? Are you going on vacation? Are you traveling around? Are you investing it into the stock market? as a result of all that, are we going to start seeing a pull out because you're not going to keep getting all that money? I highly doubt we're going to see more stimulus checks in the future unless something epic happens. And I really hope not, because this past year was a complete mess, as you can, I assume, agree. But, you know, this could be something that we need to keep our eyes on. Will we start to see that slow bleed down? And if we do, just keep on investing. Just keep on focused on what your long-term goal is. If you're looking at, I want to become financially independent someday, I want to retire early someday, the best thing you can do for yourself is stick to that plan that you set for yourself. Don't let fear drive you in the market. So that's what I got for today, guys. Hey, those comment scammers that comment as me and ask you to text them on WhatsApp, I decided I'm going to go after one of them. I'm going to actually message one of them. And I did. And that video is coming soon. So make sure you stay tuned for that video, because I decided to text Bob Sharpe. And it was a lot of fun. So that video is coming up. I actually confront, and I'm actually trying to create awareness around these scammers, because I was a little bit concerned to hear all the people that have actually texted them, sent them money, and lost their money to the scammers. We can't be doing that. We can't be doing that. It's one thing to maybe lose a little bit of money in the stock market because the goal would be to hang on tight and let it recover. It's another thing if your money is going to scammers and you never see it again. So I want to bring that awareness. Stay tuned for that future video coming up. Until next time, guys.